Hello, everybody. Welcome back to the channel. We are here on a Saturday afternoon, 12 p.m. This is replacing your Saturday cartoons from when you were a kid because now you are trying to get financially independent and trying to make some money. So we've got someone here who I believe is honestly one of the best fintech analysts on the internet, quite frankly, and more people are figuring that out. We have Mr. Crossroads, aka known as Roy, with me here today. Thank you for being here, sir.
Thanks for having me on. Yeah, a little bit too high of a praise. We'll see how PayPal turns out, but no, I'm very excited with fintech this year and love to talk about it with you.
Okay, so it's not that high of a phrase because you have become a regular on the SoFi Weekly, and from the comments that I'm seeing, people can't get enough of you. People love you. They're like, "This is Roy's show." So like, can you give a little bit of like, why do you think you're so personable? Why, other than the Howard Stern voice, why do you think people like you so much?
I feel like I've become a meme at this point almost, so, but in a good way. I mean, the SoFi community is really good. I think there's three really strong communities on FinX. So Twitter, or not Twitter, Tesla, of course, has been there for a long time. Palantir, I think, is just as strong, if not the strongest. And then the SoFi community is very strong, very supportive, and so that's part of it. And most of my focus, there's on the SoFi Weekly, there's a lot of guys that frankly know the company better than I do, and they come from a quantitative analysis background, and so they're looking at numbers and figures, and that's very, very important. My main focus is qualitative analysis, so it's just
Right.
it's a little bit of different discipline. Numbers absolutely important, still look at those, but what actually brought me to SoFi, like for instance, was that management. And with Palantir, we won't talk about Palantir too much today, but it was that vision. Is like, okay, are they actually able to carry it out? And just their whole worldview, the way that they approach protecting and defending the West, their morals, the way that they integrate all that from top to bottom. I'm like, okay, I'm interested. But then after that, I'm like, okay, do the numbers make sense? And that's where I go. And most of the time it's like, do the numbers make sense? Okay, then I'm interested, and let's look at the story. So I just do it in reverse. That's all.
No, I think it's very special, dude. I think we are in a new age where people like you and I are replacing some of the other mainstream media analysts just in terms of how people want to consume information. I know you're seeing it. You have people legitimately following every one of your posts. There's plenty of them that have notifications on for your posts. When you tweet something, they want to consume what you have to say. And I think it's just such a special thing that you're a regular guy. I'm a regular guy. We could put out thoughts and opinions via these democratized platforms and legitimately build an audience to the point where you went from 0 to 6,000. You're going to get to 10,000 soon. And you're going to have people that actually care about your thoughts and opinions. And I think in the world of finance, where your reputation really is how well can you analyze this? Because if you can't analyze this, either qualitatively or quantitatively, you're really worthless in terms of your content, right? There's no value to you. But if you are able to analyze and people follow and you see that people care about your thoughts and opinions, it's a really special thing because giving people ideas on how to make money, which is the universal way for a lot of people to have upward mobility, is a special skill to have. So super awesome. And thank you for being here today. PayPal. Yeah. This is one of your largest stocks, one of your biggest positions. Stock's been in the gutter for a very long time. I've got a lot of questions on PayPal, but let's start off with this. What are you expecting for earnings this week?
Yeah, I think quarter four is going to be really good. I expect that they'll have a triple beat, top to bottom. But the main thing that the market is focused on is that guidance and then margin inversion. And so, but as far as numbers, I think they'll post a little bit higher revenue. I think they'll have a higher take rate, or not, perhaps a higher take rate, but the margins are still not going to inflect. And that's what the market's going to mostly be concerned about. I think one thing that's going to actually surprise and maybe shock the world, I don't know, is that EPS guidance through 2024. The Alex Chris is not messing around when it comes to cutting expenses, when it comes to automation. We saw, of course, there's a payroll cut that they did, a 9%, 2,500 employees.
Big cut.
They divested of Happy Returns shortly after it came in. And I'm sure that was already under talks. And it just seems like all the products that they're launching, there's a few that might take a little while to build. It might take some resources, but for the most part, it's like, hey, we can just ship that now at very minimal cost and just see where it goes, and it should grow branded I think very well. So I'm actually very excited by what's going to happen this year. But the main thing again that the market's going to be focused on is that margin inversion, gross margin inversion, and PayPal has said themselves is like, hey, that's not inverting in quarter four. So I know that the headlines will read PayPal, loses margin again, or active users decrease. those are planned, those are known. You know, it'd be great if it was the reverse, but it's not the reality. The biggest question is when that'll happen, and I think it'll happen sooner than people are expecting.
Yeah, I think there are definitely a lot of headlines going into Q4 earnings that you, as someone who understands the company very deeply, are expecting. Just like, you know, both of us with Palantir, like maybe the revenue is not amazing this quarter, but it really matters what's going on into the future. And that is what we know, but does the market really understand it? So let me ask you this question. Why do you think the market has left PayPal for dead? We saw this with Meta in October 2022. The biggest upgrade for PayPal at 116, price target just got downgraded to 60. Like, why do you think there's such negative sentiment around this stock?
Yeah, I think there's a few reasons. One is those year-over-year comps. So, you know, if you look at their chart, they were artificially inflated during the COVID years. They absolutely were. When people had money and they were just going left and right, you could actually take your stimulus stuff directly from PayPal. E-commerce was a lot bigger than. I mean, it's growing, but it just grew immensely. And so, if following right after that, after those were pulled out, and after the economy started to struggle a good bit worldwide. Those are some massive headwinds against PayPal. In addition to that, as the dollar strengthens, that's actually, you know, this as a Palantir shareholder, that's not great for that international revenue. And PayPal is a global corporation. You had the war between Russia and Ukraine. You have Israel. You have of course, oil prices going up and down. All of that would just basically made it very difficult for those year-over-year comps. And so the acceleration wasn't there. The other factor was, and I think the worst thing and why PayPal is kind of in this position is that formal management. Most of the management that's been there previously is gone, but they did some things where they were, and I won't repeat the stories. Like if you want to go into it, that's fine. But the political stuff where they're just looking at political things a little bit too much and focusing, picking sides. A financial company should not do that. It's not in their interest. I don't think it's morally right anyway. So they thankfully they have different management now. But Schulman had this idea of an everything app, and so he was, you know, they were talking about at the time like, hey, let's buy Pinterest, and Pinterest, like, it's fine, I guess, but why in the world would PayPal actually want? And it's to be the everything app, the WeChat Pay of the West, but there's not the demand. Nobody wants to marry their social media with their payment profiles. And sorry, Elon Musk, it's not going to work that well. And so he had this idea. And of course, PayPal, they went from a culture of innovation, and we of course know the PayPal mafia. And if anyone's a Palantir shareholder, it's like we're very thankful that it worked out with all these guys spinning off. You have, of course, Elon Musk, Peter Thiel, and many others. But they went from that deep embedded culture of innovation to one where they were almost reliant on their free cash, just buying and merging and acquiring other companies. And when you're wholly reliant on that, and you also don't do it very well, and you don't have a grand unified vision that actually syncs these things together and makes it efficient and lean, PayPal lacked all those, you struggle. And so they're in this position partly because of those headwinds, but also partly because of their own doing. And so thankfully that management's gone. It's a new era under Alex Chriss.
Well, so let's transition to that. Alex Chriss, do you trust him to make you some money?
Oh yeah. So
wait, hold on. That was great. We got to clip that. Oh yeah, that was great. That was, guys. We got it. Go ahead,
dude. I'm very excited by Alex. So full disclaimer. So I had a semi-small trading position in PayPal before Alex Chriss was announced. I was interested. The valuation made sense, and the narrative was, you know, PayPal doesn't innovate, it's dying, but it's actually the opposite. It's growing. There were innovations coming out. They hired John Kim as a CPO back in September 2022, and so I'm like, yeah, I'm interested. When Alex Chriss was announced as CEO, I'm like, I don't know who that is. Honestly, I didn't. I was like, maybe I've heard the name before, but I had no recollection. And of course, he worked at Intuit. He ran basically half of Intuit, working with small and mid-sized businesses. And just looking at his resume, I watched hours and hours and hours of videos. He has articles going back, I think, through 2014, 2015. And
okay, so if you are like an LLM that has condensed all of his information on this guy, and I were to ask you, like, what makes Alex Chriss motivated, how would you respond to that?
Well, if I wasn't hallucinating, and I'm not, because I'm not an LLM, yeah, I'm using KLLM, so we're okay.
I love it.
No, I would say, you know, he is a small and mid-sized business expert, that he has been thriving in this industry. He helped Intuit phenomenally grow. I think the CAGR was it 25 or 30% over the 5 years that he was there.
Yeah.
Phenomenal communicator, great leader. He's a talent magnet, and so he attracts people. He builds them up. He puts them on platforms. They do very, very well. He actually knows how to run a large business. So I know he wasn't a CEO before, but when you're running half of Intuit, you basically are. And he knows what is needed. He came in, and I was thinking that the first thing that needs to happen is, of course, a diagnosis of what's wrong with PayPal, what needs to be fixed. And honestly, there's some things that are wrong, but it's not as bad as the stock price would indicate. But he came in, nailed it out of the park with the diagnosis. I'm like, all right, I'm not all in, but I think I tripled or quadrupled my position at that point under Alex Chris. I'm just like, I'm going in big. So
PayPal is what, number 2 in your portfolio? Number 3?
I'd have to. It's number 2 because SoFi. It's normally neck and neck. SoFi hadn't done so well this week, so yeah, it's number 2 for sure.
Okay, so let's transition to the event that happened that was shocking the world. I guess, I mean, so the core innovations were a smart receipts type of program, recommendation in your receipts, in an innovative way to check out, kind of with Face ID and things that are just 1 or 2 seconds faster that could result in billions of dollars more of transaction volumes. And this new kind of like app that's them recommending actual products. I don't even know what this really is. Is this an Amazon Shopify competitor? What it is? What were your thoughts on the event itself and the actual innovations? And do you think it'll increase the bottom line over the next 6 months?
Yeah, so I think it's actually really exciting. So didn't quite fully know, like I had some ideas as far as what they might roll out and announce. And so these were not all of them, but most of them were, somewhat different and usually in most cases better. One of the advantages that PayPal has, they have 435 million active users. So 400 million individual regular consumers like you and I, and then there are 35 million merchants that are on there. And so they have this global massive network of data that they've used, and they do a good job with that, with conversion, not conversions, but with fraud detection. They're doing a good job with authorization for like buy now, pay later products. And so they have an advantage there because the larger your data set and also the more qualitative it is, and they know both the buyer and the seller. And actually what people are buying versus like Visa just knows, hey, this is the amount. But with that data, they've really not leveraged it until, except outside of those things that I mentioned. And so Alex Chris comes in and he's like, hey guys, we have this massive data moat. We do. There is no company in the world like PayPal that has the qualitative data and the quantitative data that's so widespread among both sides of the network, merchants and consumers, that's global. There's nobody like that. There's people that maybe have more data, but it's not as high quality, or it's very localized. There's people that have less, but it's very high quality, but it's a lot smaller. Nobody's like PayPal. And so he's like, why don't we actually use this to drive conversions? And so that's what he came out with. So half of the innovations, frankly, were things that should have rolled out 3, 4, 5 years ago. One of those was the biometrics, being able to log in with your face or with your thumbprint, like Apple Pay. I don't know why it took so long, but that's one of those things Chris said when he came in. He's like, hey, we have to ship products faster. This is not acceptable. Right. We've kind of lost that. So, but the other half are things that drive conversion. So the fast lane, for instance, you mentioned that's a faster checkout, 40 or 50% faster checkout speed. And you're like, what's the big deal with that? Well, it's passwordless for one. I have, I think tomorrow something coming out on a study that's done on actually how users prefer passwordless or guest experience more often than not. So any friction that you have during the checkout process, they have what's called checkout conversions that they look at. So when somebody puts something in their cart versus when they actually check it out, and there's a gap there. And usually that gap is close to 50%, if not a little bit higher. And so PayPal, they worked with BigCommerce, one of their partners, and they ran a study using this fast lane. Conversions, instead of being the traditional 40 to 45%, were 70%. And you're like, okay, that's a good increase. Well, what does that actually mean? For the merchant, it means that they're having, like 70% higher actual revenue coming in, which is phenomenal. And the higher the revenue that's coming in, because they have more and more conversions, the more fees that PayPal gets because they charge based on a transaction amount. So it's very, very exciting. And it's a very simple thing to integrate. It doesn't seem like it's going to take, a lot of development or time to roll out. They have smart receipts. That's one of those where he mentioned that 45% of PayPal users, and this blew me away, actually check their receipt. Now, if you use PayPal, like for me personally, I use PayPal. I never check those receipts. I don't know, like, it's like, it's not that entertaining or interesting. I already know what it is, whatever. But for some reason, people click on it. If you click on it and you put your eyeballs on it, Alex Chris is like, why don't we, using our data algorithm, knowing exactly what they purchased, knowing
Right.
the merchant, knowing the consumer, offer a product to them and say, hey, here is something you might like, picture, price, and if you buy it, you get a little bit of rewards. It's like, it doesn't cost PayPal anything, doesn't cost the merchants anything because they don't have to pay anything unless that sale actually goes through. It's like, that's really easy to implement. Why didn't they do this years ago? But nobody's doing something like that. It's amazing. And of course, they have the ad vector, which I need to hear more information on how that'll play out. But it's most of the time, advertising is built on what you've looked at or what you've clicked on. And that can be pretty informative. But what's even more meaningful is what you've actually bought. So if you bought something, then the algorithm knows, okay, well, they're obviously into like spicy beef jerky. So we're going to shove some ads towards them that are probably not vegan or anything like that, but we're going to have some wild honey boar spicy beef barbecue. And maybe Ahmed will like that because we know that he loves this other stuff. We'll see.
So when Honest Chill says, what do you mean on the qualitative data? I think that's exactly what you just mentioned, which is, do you like beef jerky or not? That is very qualitative about the end user at the end of the day. And then did you check out is more quantitative in terms of the analytics.
Exactly. Yeah. Instead of just, so most, and not all, Adyen, of course, they know, what people are actually buying, but many of the old payment providers, so the Visa, the MasterCard, Discover, mostly they just know the amount. They're like, okay, it's $76 and it's from Dick's Sporting Goods. So probably sporting goods. PayPal's like, okay, it's $76 and they bought, some basketball stuff specifically and basketball shorts and soccer cleats. Okay. Why don't we use that to feed them things that are related to soccer and basketball specifically? It's a little bit more, actually quite a bit more effective.
So do you think that leads to this, I think they call it advanced offers platform? Is that like a app where they're selling random things from third parties?
I don't know.
Yeah, I think we both need clarity on that, right?
Yeah, I mean, they had like I don't know. There's maybe like 3 minutes on it, and it's like, this is very interesting. These personalized ads on this level. The cool thing that I heard is, I think a lot of merchants will try this out because Alex Chris said, hey, if so usually on ads you pay based on impressions. So if 10,000 people, 100,000 people see that, you're paying money whether you get sales or not. PayPal's like, you know what? Let's do one better. We're not only using this quality data because we know the merchant, we know the consumer, we know that what the person likes to buy, we know what actually other people in the similar profile like to buy, and so we can recommend based on that. It's just better informed. But they also beyond that will say to the merchant, if this sell does not go through, you don't pay for this.
Right.
So why don't you just click that box and say, yeah, go ahead and do this, recommend this. If it means more sales for you and you're in business, why not?
Why not? No, I agree. It makes a lot of sense. I'm excited for the innovations. I think it'll take 2 quarters for it to hit the bottom line, especially now that they've done the layoffs. I mean, look, at the end of the day, it's probably going to result in some reductions of expenses. And the question then becomes, does that impact the bottom line? Which I guess we'll find out.
And on that, real quick, on the bottom line, so last year they grew by 21% non-GAAP EPS growth. And a lot of that was through in the reducing the flow or the amount of employees by about 2,000, so 7% last year, and also just greater efficiency on the OpEx side. Alex Chris, has already started off the year with deeper cuts, and just the language they're using, analyzing it seems a lot more aggressive on the OpEx side. So last year they saw about a $1 EPS boost just because of those cuts. This year I think that we're going to see the same, and so or better. And that's even before we look at the buybacks. That's before we look at these new products driving branded growth. That's before we see some of those headwinds that are in the macro actually shifting to tailwinds. Of course, Amazon had a great quarter. Visa, had some very good things to say about consumer health. It seems like things are getting better also on the dollar, the strength of the dollar side. So this is going to be, I think, a very, very good year for PayPal, and it's going to shock the world. That's what Alex Chris meant, not that one-day event.
Why would Elon not shock the world and destroy the company that he once originated, which was PayPal, by launching something that's a competitor like X Payments?
Well, I never want to doubt Elon. Like, Elon's capable of a lot of things, but the fact of the matter is he's one person. And so Tesla shareholders, and you and I are one. You still have your Tesla?
I have 15 shares.
All right, there we go. It's
I'm
this
holding
is start.
strong.
You know, my position's very small too. It's my smallest actual position that I'm building out, but that's a goal this year. But
Yep.
anyway, we know as shareholders, like he is stretched already with all the companies, all the things that he has going on, and frankly, SpaceX is his darling, and maybe at the X platform as well. Like he loves Twitter. He bought it. He loves it. He's on there all the time. So, but anything else that he's creating or making, it takes time. You know, he's only one person. He only has so much time, so much brain space. And yeah, he has people he can hire that can work on this. But the thing is, we've seen already in the past that people, at least in the West, don't want to combine their social media platform with their payments. So Meta is one of
Well,
those.
why do you think that? Why do you think people don't want to do that?
I think part of it's trust of the government. So it's the government already is tracking a lot of different things. Why do you want to marry those two things? There's a lot of distrust towards social media giants. We saw some of that in Congress this last week, and of course, Meta is killing it as a company. I don't love that company, but Zuckerberg is an amazing CEO. They have great products. You know, they of course have Facebook, they have Instagram, they have WhatsApp, and
They tried Libra and that didn't work. So I think you're right that this
yes.
payment stuff is very complicated with the social apps.
Well, and they tried MetaPay more recently. That's one thing that probably almost nobody has heard of MetaPay.
Yeah, I never heard of that.
Vitaly had said that it's actually used on the Quest, the Quest 3.
Oh, wow. Okay.
Some, but nobody uses it, despite having this marketplace already built in on Facebook. I actually am using that to sell a few things here and there. You know, like, hey, I don't need this couch. Let's get rid of that. But nobody uses it. Nobody's heard of it. And their network is far greater than what Twitter has. So I don't see anybody actually ended up, if it didn't work for Meta, I don't think it's going to work for X. The other factor is, you know, there's a lot of people that don't like Mark Zuckerberg. I'm one of them. You know, I'm not a huge fan. I'm a huge fan of Elon, but there's a significant amount of people that are fearful and skeptical and hate Elon. I think it's unjustified, but those people, I can guarantee, will never use the X platform ever under any bit to have any sort of payment there. They're not going to want their payment details there. They're just going to want that removed. I even know some that will not buy a Tesla, even though they love it. They love the product. They think it's great. They love the price. They love the network. They love everything about it. They hate Elon Musk so much that they're like, I'm going to buy a Rivian.
Yeah, I also think it's not going to make that much money for them. Like at the end of the day, if you're a payment solution provider, you get a lot of money on the checkout of an e-commerce platform or a website. Sending money to your friends, I mean, there's some money there, but it's very minimal, and it's more so a utility that the platforms have to keep you isolated into their network. Like Venmo, I don't think they really make that much money off me sending you $1, but they make more money on the advertising of the businesses that are on there, and then eventually the data that they get. So even if Twitter, with their 500 million users, said, "Hey, you can start paying everybody," first of all, I agree with you. I don't know if I'm sending money to someone on Twitter versus like Apple Cash or something. And then B, it's just like, why would that increase Twitter's bottom line and all the R&D they would have to spend to, like, it would be a few, I would say 10, 20 million bucks, 30 million bucks to get that even out the gate. They don't have that money to spend on stuff like this.
And it won't be global. And yeah, just like you said, it's a very low margin business. So Venmo, which is owned by PayPal, by the way, if folks didn't know, it's like Venmo's owned by them, and Cash App, they're low margin. They just are that. The peer-to-peer, it's a small niche. It's important, but yeah, it doesn't make a ton of money on as far as margins.
Okay, so you have, as a PayPal shareholder, you are not in the slightest concern about Elon Musk eating PayPal's lunch.
No. Apple Pay is more of a credible threat, even though PayPal gets a little bit of that revenue. And Apple
Pay how does PayPal get some of that revenue from Apple Pay?
So Braintree, they had these great acquisitions, I believe, back in 2017. So Venmo is one of those, and Braintree is the other. Braintree, many people will say, I've not used PayPal, I've not used Venmo in all these years. I don't use the product at all. It's a dying dinosaur. And they don't realize that when they use Amazon Pay, Shop Pay, Google Pay, Apple Pay, those are not payment service providers. And so every single one of those transactions, or most of them, maybe not every single one, are back-ended by a payment service provider. There's a lot of them out there, but really there's just three. It's a triopoly. So you have Stripe, which most people have heard of. You have Adyen, which most people haven't, but it's actually a phenomenal company based in the Netherlands. They do great work, and they're beginning to break in. They actually run a lot of what Amazon has. Of course, Shopify loves them too. McDonald's as well. And then you have Braintree. So these three seem like they've split the market pretty well. And there's just very smaller niche players out there. And they're actually back-ending the transaction. So when you use Apple Pay, I wouldn't say a third of the time, but close to a third of the time, that's going to be going through something like a Braintree, and a third of the time Stripe, and a third of the time Adyen. And so they're getting some of those revenues. Apple actually doesn't really make anything from that. They're just offering that as a service because they like to integrate everything. So
Right. Okay. This stablecoin thing. Can you please explain to me what is this? And I mean, why did PayPal even do this? And how do they make any money off a stablecoin? And what is a stablecoin?
yeah, so a stable coin is something that's pegged to an asset. So it's designed to stay stable, to not move up and down dramatically. And if you have known anything about stable coins in the last couple of years, there have been some that have absolutely not worked out and have imploded. Mostly that's because of lack of regulation, and because they don't actually do any audits. They don't. They're supposed to back one-to-one assets on the back end. So it's like, oh, if there's 300 million in this stable coin, then we need to have 300 million in like cash or T-bills or something like that that's easily convertible. There's these crazy things. There were algorithmic stable coins, Luna. It just that never works.
Those imploded. Yeah.
Yeah. So these have been anything but stable. Primarily there's two big ones in this space. There's Tether and there's USDC that's owned by Circle. They may be IPOing here maybe next year, possibly later this year. The way that they make their money is there's a little bit through transaction fees, very, very low, very minimal, especially compared to normal payments. But primarily it's through having the backing of, let's say if they have 90 billion in their market cap, then they supposed to have anyway. Tether, I don't think actually does, but Circle does. Their quality. They'll back end with that much of assets, and so they're making the revenue off of T-bill. So in this higher interest rate environment, that's a huge vector for Tether specifically. They're the number one in this space. PayPal, their product's a little bit different. So it's grown from August, the launch, till now to 300 million market cap, which sounds massive. It is a top 10 USD stablecoin, so top 10 worldwide. I think it's either 8 or 9 by market cap, and that's probably the most important metric right now. But I mean, honestly, like 300 million compared to like 90 billion is nothing.
Right.
It's going to take time to grow, and Web3 development and growth and integration is going to go first. But really what PayPal has primarily designed this for is to be a digital payment rails for cross-border trade, I think also to integrate PayPal and Venmo, and also domestic as well. So just to take a step back, some of PayPal's competitors actually own their own payment rails. So in other words, when a transaction goes through, they keep all of that percent take that they're going to take. I mean, there's fees and taxes, of course. PayPal is different. They don't own a bank. They have no banking license. They don't own the payment rails. And so they pay somebody like Fiserv, okay, we're going to pay you a little bit of the cut that we get. And so that cuts into their margins. And so that's one of those expenses are continue to increase. And that's one of the reasons why we've seen that gross profit margin and the take rate just slightly go down every single quarter for like 5-6 quarters. There's other factors in there too. So what's very significant for PayPal is if they're able to integrate this stablecoin into everyday commerce, you pay the network fees unless you're just in-house using PayPal, which is very, very small, and you pay a little bit on the gas fees because this does run on Ethereum. Right. Thankfully, those are nowhere near as crazy as they were a couple of years ago. And so what this means is, so cross-border is already their most lucrative product by far, just because if somebody's buying something from China paying USD, there's a conversion there. There's these old toll booths, basically, you can think of them. And so maybe there's like 5 or 6 along the way where you have to pay all these guys, and that adds up. And so PayPal, though, they still get a large cut from this. So they still do make out very well. Pay USD, if it works out this way, and it will take some time. It's not, I think, happening this year, maybe towards the tail end of this year. They will be able to say, okay, we're going to skip all these toll booths. We're going to instead just go directly to the source, be able to convert this from PSD to USD. It's faster, it's programmable, and it saves them a bunch on margins. And the reason why I think that they're actually poised to be able to do this, because this is, others have had this vision for a while, no one's been able to carry it out, is because usually for stablecoin, you're either just a stablecoin, that's what you do, like Paxos, Circle, of course, Tether. That's what they do. They're a stablecoin. They don't have any relationship with consumers. They don't have a relationship with merchants. So their coins are almost exclusively used on Web3. PayPal has 400 million consumers that are active users and 35 billion merchants globally. They work well with regulators. They actually have what's called a prudentially regulated stablecoin, which I won't go into the details unless you want to. I've got a post on it from a while ago. They use Paxos to actually back in that and make sure everything's up to par. But it is the most scrutinized, the most regulated stablecoin that's out there. There's two others that are at that same standard. One of them is also backed in by Paxos. But just because of those connections that they have with the consumers, with the merchants, the global size network, the way that they're able to work with regulators, and the regulation that they've self-imposed to make sure everything is up to par, over time, I think that they can easily just basically, you can picture something maybe a year, two out, where you are buying something from China, and there's a little pop-up that says, "Hey, would you like to use PSD? We'll give you $5 if you use it," and you agree to use it in future transactions. And you're like, okay, well, what does that mean? It just, okay, you'll get your money, or the other person will get their money faster. It'll work exactly the same thing as US dollars for you, and we'll give you, $5 right now. What do you say? And you're like, okay, well, sure, why not? So you click on that button. PayPal saves a bunch of money. They for the merchant side, the merchant, it can instantly convert to USD on their side as well. The fees are much lower, and I'm guessing that PayPal would probably pass a portion of those savings onto the merchants as well. But it lowering their margins to far below any of their competitors would absolutely cause PayPal to go from, I think that they'll do well even if this doesn't happen, but to just dominating e-commerce. And the thing is, other people, like, again, they don't have the 400 million active users. They don't have the 35 million merchants. They don't have the global presence. They don't have the ability to work with all these different regulators like PayPal does so well, sometimes too well, frankly. Yeah.
So in the context of these crypto companies, for example, if I'm running a Web3 type of startup where I want to pay people via crypto, instead of paying them straight Ethereum, I could pay them via the stablecoin.
Yes.
Which is when, and the more people that use the stablecoin means the more volume, means theoretically more the market cap can grow. And your argument here is that a stablecoin makes it easier in the crypto world to conduct peer-to-peer payments in the same way that you would use with Bitcoin and Ethereum, but these stablecoins have come up as a alternative method that are pegged to the US dollar that are safer than some of the other outlets. Correct?
Yeah. They're audited every single month. They have to have the 1-for-1 backing. There's an organization in New York that actually audits them, and they post these on the website every single month. So it's very, very thorough. Prudentially regulated also means that, so Paxos is the one that's holding and authorizing this for PayPal. So that's even a step removed from PayPal. But if Paxos blows up, prudentially regulated basically means that it's not tied to Paxos. So that if Paxos is like, oh, we're bankrupt, we have to liquidate this, which has happened several times in the past couple of years, and then everybody that has that, it just loses their money. It's actually siloed, it's separated. They cannot legally touch it. And so everybody that has their PayUSD coin, it's always going to be worth that 1-to-1 US dollar. So unlike something with Ethereum's great, it's good for many things. It's not particularly suited, and other cryptos like it, for real world payment, just because you have to think, okay, I'm holding, I don't know, half an Ethereum token. Well, how much is that worth? I don't know. I'd have to check it up. PayUSD, you're like, okay, I'm holding 500 of these. Okay, how much is that worth? 500 USD. Well, what'll it be worth though, like 3 days from now? 500 USD. Well, what about from the merchant side? They're like, okay, great. Ethereum, they want to get rid of it. They want to convert it into fiat. With PayUSD, they'll probably want to convert it in the same way, but they don't have to worry about, okay, what if it goes down? It's not going to go down. It's regulated, it's backed fully, and it's always worth 1 USD. Of course, part of that, as they grow over Web3, they need to continue to improve in the market cap, the spread. That'll help with the liquidity, and that'll help with some of the slippage that can happen over the larger transactions. So,
and they make money on the network fees, essentially, PayPal.
Yes, yeah.
From this, okay. All right, you just talked for like 8 minutes straight on stablecoin. I don't know how you just went like 8 minutes just straight fire on stablecoin, because I didn't know what the hell a stablecoin was, quite frankly. I have no idea. And so you really understand this company, dude, for you to talk about it for that long. That was good. That was dope stuff. Let's transition to SOFI. This is a company that is basically, I think, crushed it on their earnings. Just beat on every metric. Anthony Noto, superstar CEO. Stock pumped almost 40%, 35-ish% on Q4 earnings to about $9.45. And now stock's back down to $7.40, $7.50, kind of where it was started before. I mean, other than a hot jobs report and Jay Powell basically saying that they're not going to have March cuts, I kind of feel like it would have come down regardless. So what are your thoughts on what happened during earnings? And then after that, why does the street not want to buy the stock more?
Yeah, the biggest thing for earnings was GAAP profitability hit for the first time, and they're guiding for continued GAAP profitability all the way through, like all the way through the entire future. Even though they had reiterated this, I don't know, like 20 something times throughout the year, people were not believing them. I don't know why at this point they doubt Anthony Noto, because literally you know what to get with both the company and the stock. So the company, you're like, okay, what can I expect with SoFi? Well, they're probably going to raise guidance. They're going to exceed revenue. They're going to exceed, and now it'll start exceeding on EPS, which they did this quarter. And so just triple beat after triple beat after triple beat. And that will continue. It's just phenomenal leadership and management. And you also know what to expect on the stock. If you look at every single earnings, I think the last 6 or 7, it pops up. And guess what? It comes back down. And I was like, okay, maybe GAAP profitability will actually break this cycle. They've been killing it recently. No, that didn't happen. And part of that was like what you said, headwinds that just hit banks. TFC was even hit a little bit, although they sold some assets, so they did.
All the regionals got hit this week.
Yeah. It was a banking thing, it was a macro thing, and then part of it was that self-fulfilling prophecy. So there's many traders that'll come in and say, you know what, I can make some money on this. In fact, I made a little money on this too, selling puts and then rebuying it when we were near that top. And it's like, okay, I know how SoFi works, keeping all the rest of my position there, but it'll pop up, it'll come down. And the more often that happens, the harder it is to break out of both of those trends where people expect the triple beat, and I think we'll keep getting it, but they also expect the stock to rise and fall back down. At some point, it will break this trend. But it may take some time, and actually SoFi's best chance is just to continue to kill it and continue to improve, as the macro, as headwinds improve. The other thing too that I loved that Anthony Noto did, most companies at this time, they'll guide for 2024 and that's it. Sometimes they'll put things a little bit further out. He's like, hey, let me guide for 2024 very concretely with soft expectations. So one thing that they mentioned, they said, we're guiding as if there's going to be 5% U.S. unemployment. Now, we just got that jobs thing, and I know that you're working on the macro side. Tell me, are you expecting 5% U.S. unemployment this year?
I'm not, but if it does happen and SoFi's creating their business around that assumption, that's not a bad assumption to have.
Yeah. So they're guiding in with that, but at the same time, they're saying we expect 5% unemployment, and we're baking that into our equations, and we expect 4 rate cuts.
Yep.
Do you think if we hit 5% U.S. employment that the 4 rate cuts make sense, or would they do more? It's like
I would imagine more. Yeah.
Both of these things can't be true, but Anthony was like, we're going to assume both of these things happen. We're going to assume that our lending actually shrinks. So maybe it's 95% of this year instead of actually growing. We're going to be a little bit more cautious of that. Of course, they pick people with very high credit scores very selectively, but they also expected phenomenal outperformance with both tech and with financial services platforms to the extent that 50% of their revenue is coming from that, 50% from lending for the first time. So it's just showing their diversified asset portfolio. So even if macro turns negatively, they've already baked that in, and they have other things that'll actually do well in a very different macro environment. And beyond that, they got it for 2025, 2026, somewhat as far as expectations, and even mentioned the CAGR that they expect to achieve 2026 and beyond. Mentioned some products that if they didn't launch these things, then they would expect this kind of performance, and almost hinting like, hey, we're going after businesses after this.
Do you think the street, which is composed of banks creating these price targets, don't want to see SoFi win, or want to keep the price artificially depressed so they can acquire better positions until they let them break out?
I mean, I think both are true. There's some that are like that don't love SoFi because it's a competitor, it's a bank. It is like you said it. It's a bank. It's a bank that has some other features that are growing quite well. The financial services, more traditionally, some of those are banks, some not. But also the tech platform, which is growing. That's exciting. That's coming, and it's actually doing a lot better now, and will provide at least 20% growth this year. There's some of that where it's like, okay, they're a competitor. So like if Walmart had a chance to give a price target on Amazon, they'd probably be like, yeah, this thing's a dud. It's a stinker, and they're not doing this well, and their client business isn't doing well. So it just doesn't make sense for a competitor to say that. Part of it is, typically these large institutions love accumulation, and it takes time to accumulate a sizable position. There's not a significant amount of institutional presence yet. And so I think that's a factor as well. And it was crazy. So if I read a couple of the analyst reports, one of them was saying Anthony Noto's expectations are too lofty and too high. We don't see a way that they can meet it, despite more than 2 years of outperformance and actually very soft expectations going in. And then somebody else came in, another analyst had said, we believe that they're actually sandbagging. But what if they're actually not? And so we're baking that in. So you can't please everybody. It seems like a lot of analysts just cherry pick the one little piece of data that they want. There were even some people that said, hey, we're bearish on SoFi because lending is not growing this year. I think it'll grow, but that's what they guided. So fair enough,
You are part of the FinX universe. Why do you think SoFi has such a strong community? Sometimes, I mean, the amount of people that are talking about this stock seems like it's more than Palantir and PayPal. Like, why do you think people care so much about this bank?
So at least compared to Palantir, one thing it has going for it is people actually are able to use it. You and I mean, we can have some interaction with Palantir, you understand it phenomenally well, and I understand it somewhat. But we can't actually use Foundry. We can't use AIP. We can't use Gotham. So, and Apollo certainly, who knows what Apollo is? Just kidding. But with SoFi itself, like you actually have used the bank. Perhaps you've gotten a mortgage on that. You use the Invest platform. You use their Relay platform to be able to check things. So you're familiar with it. You like it. You're like, okay, SoFi Stadium makes sense. You see Taylor Swift thing there. You see the Chargers, whatever. You're like, okay, I like this company. I like what they do. They're very visible, and they're very much a B2C organization right now. So I think that's part of it. They have, again, phenomenal leadership. They've continued to outperform. But I think the early roots of this, and I hate to say it because I'm not a huge fan of them. It goes back to Chamath and the SPAC stuff during the fervor in the market, the dates back to SoFi's early days. And so it began to develop a strong following at that point. I think many of those people are still in there just because they did see the real potential in SoFi. It was early. It was a different macroeconomic environment, but they have done nothing but excel since then. And they've transitioned the business quite well from basically being student loans, and that's what we do, to, hey, there's no more student loans, we're going to die. And somehow, despite those insane headwinds, they were able to bring the company from should have died, should have went bankrupt, should have had nothing left to do, to this company that has grown phenomenally, growing at a rate that banks don't grow in. It's not just a bank. It is a bank, but it's not just a bank. And of course, they've achieved GAAP profitability despite doing this the whole time in these insane headwinds where banks don't do particularly well.
Yeah, and I think they have a stellar management team, and their management. I mean, the fact that Anthony Noto has not sold a single share of SoFi, I mean, it just compels shareholders to buy into his vision if they see that level of commitment, and really rally around the company, not only from using the product, but also from saying, hey, if you're not selling, we're not selling, and we believe in your vision. You seem like the guy who's going to take us there. His background is impeccable, in terms of football. He worked at Twitter, just like the man of integrity that he is. He's a coach, in general, when you're a coach, you know how to rally the troops. And so it's exciting. I think SoFi will be fine, but right now the street's just not touching the stock yet.
Nope, not yet.
Robinhood. Let's talk about these guys. So why are you bullish on Mr. Hood?
So disclaimer for here. So SoFi, long-term position. PayPal, it's for sure a trade. I think it's going to become a long-term position. I have shares and I have leaps on that as well. Robinhood, purely just leaps. It's purely just a trade for me. Robinhood is hitting the same people as SoFi as far as they're targeting the millennials, younger generation X, and Zennials as well. But they have, in this 2024 time span, coming up something that I'm calling the golden confluence. So Robinhood makes their money on a few vectors. One is cash sweeps, which they have right now, and it's doing very well in this high interest environment. And the higher interest, the better it is for Robinhood, even though they'll continue to make money even with lower interest. The rate doesn't matter so much. The only reason why the rate matters is it attracts people to the platform.
Right.
The other factor is, of course, stock trading itself, especially the more degenerate, the better, honestly, for Robinhood. But then you also have crypto. And so this year, of course, interest rates are expected to be cut. Who knows if it's March, May, later. only. I
Who
mean,
knows if
Powell
it's
probably.
never? Who knows if it's just
Yeah,
imaginary and it never
we're
happens?
raising again. Like, can you imagine if he came out and said, "Hey, we're hiking"? It's like, what are you doing? You, oh man,
Dude,
So
if they say we're raising again, I will go buy a bucket of raisins and literally eat all of them live on the stream because I would
I'll
not,
do
and
it.
I hate raisins.
Co-stream,
Yeah,
co-stream.
yeah, exactly. But,
Yeah, that. But I mean, they can. Well, nobody knows at this point. But uh, during this year, interest rates, even if they're cut, they will still be quite high. Those cash sweeps will continue to generate a lot of income, so they'll have that firing on all cylinders still. Of course, the stock market is heating up. It's continuing to hit all-time high after all-time high. And I think that'll continue through the year, some ups and some downs. We started off with some downs. I think we're going back up as earnings have been very good, especially for the Mag 7. And throughout the year, I expect that to continue. Bull markets don't just last, like a year. They last years and years. So, and then the other factor is, of course, Bitcoin. I know Bitcoin after the ETF launch, it just dumped. It was a sell the news. I didn't know what to expect there. That was a tough read, but many things are a sell the news at this point. But it's slowly climbing back up, and the halving is coming up. You're in Bitcoin, so I don't have to explain it to you. But I think this will be a very good year for crypto as well. And so this is a year where, okay, so last year they made money. They actually went GAAP profitable for a quarter. They were hit with legal fees this last quarter, and coming up for 2024, which will remove that possibly. But they hit it because of those cash sweeps. In previous times, they were growing just because they had so many more users on that. So this is a year where they have revenue pumping in from crypto, from the stock market, from cash sweeps, at the same time as they launch in the UK for their platform, and they launch crypto in the EU, and of course their X1 credit platform, which is just a phenomenal offering, is also launched and fully running. So it's like, okay, and this quarter 4 is the last quarter of those legal fees, plus they reduced their share count because of that repurchase from FTX.
55 million shares. Yep.
And they've been just very conscious as far as operational efficiency. So it's like, dude, you look
And the
at their
market cap is half in cash. Is what
it more than half. Yeah, it's. I have not looked it up today, but it's close to 8 billion. It's 7 point something billion as far as what they're actually worth, and most of that is cash and cash-like assets that they can just convert. They don't have any debt, so I am hoping. So I'm not changing my position. It's about 5% of my allocation, and again, all leaps. But I am hoping and praying that it comes in, and because they've been acquiring so many people, like there was that Vlad announcement that you mentioned, where they're like, hey, if you miss your call, it might be 3 weeks later. They're so busy acquiring people, and there's a cost to acquisition that I think will hit them this quarter, plus the remaining legal fees. I think 30 million, which may cause them to miss GAAP profitability. I think that everything else will be great, but if Wall Street just looks at that top revenue and says, okay, they missed GAAP profitability again, we're going to sell this thing, and it goes back to like the low 8s, the 7s.
It's gonna be insane. It's gonna be.
They're
insane.
worth the cash at that point. The cash that they have on, I will go in so hard, dude. I'm going to triple my Robinhood position, maybe more. I'm for sure buying leaps through 2026. I may buy stock at that point. Like honestly, like it's.
Yep.
Vlad is not my favorite CEO. I think he's very good, solid. I give him a B+. But I mean, he is phenomenal at rolling out products and executing on that, and with the vision, with what they've been able to implement. Man, that would be a dream scenario. I don't know that we're going to get it. I think maybe the street will understand well enough. Is like, okay, this company, if they went out of business now and they sold everything, they're worth about $8 a share anyway. Yeah. But if I see them under that again, please.
Robinhood's been a very interesting story for me, and I agree with everything you said. And when you talk about if it goes below 8 or something, the valuation again gets compelling, because I started studying them back in June. I've been using the product since 2019, but in June I really took a look at their stock, and that's when the market cap was like 6 billion, and the cash was literally, or the cash was 6.5 billion, the market cap was like 6.2 billion. It was just insane, and I didn't go crazy at that time, but it was a story in terms of loading up. But the story was unfolding so much, and by November is when I realized, wait a second, if we are actually entering a multi-year bull market, and the company is getting back to the levels in terms of transaction revenues they were at in 2021, but it's not a bubble anymore, then this is something that's sustainable. It's not something that's going to come up and come down. On top of that, you've had 22 months of share accumulation. I want people to look at the Robinhood chart versus the DraftKings chart. Very similar in terms of 2021 pop, very all-time highs, and then drop to the lows. And then DraftKings goes up and down and up and down. And then it rebounds in 2023 back to $41, which is close to where it was the top. Robinhood's top was like 70 or something, or 60. And it's down at 7 or 8. And it stayed at 7 or 8. We broke to 12 and 13 two times in the past 22 months. And now we're back at 1080. And so to me, and 75% of the float is institutional. So it's just really exciting knowing that, wait a second, this might be a phenomenal trade. This is one of those companies where there's been a lot of due diligence around. And I've been talking to a lot of people over the past really couple of months, just DMing random accounts on Twitter that like talk about Robinhood. I'm like, hey, give me your thesis. Like, just tell me what you're thinking. I want to know I'm not the only guy thinking this. Here's another question for you. They seem to have transitioned the company from the whole degenerate trading thing to Roth IRA and retirement. And that's where Vlad mentioned, hey, we're giving you a 3% match. And like, we just have so much demand. So you got to make sure you pick up the call. Do you think that was the right move? And do you actually think that even if transaction revenues aren't phenomenal over the next couple quarters, which I think they could be, that the gold membership and the cash sweeps with all that assets under management they're bringing, that's where Robinhood could get the additional love from the street?
Oh yeah. That's absolutely the right thing. Vlad is not just looking short term; he's looking long term, and that may hurt them, for a quarter or two as they acquire these folks, at not a cheap rate. But they're trying out. So there's a few great things about it that I love versus SoFi's Invest platform. I don't. It's okay. I don't think it's great. I've talked about it before. I love SoFi, but they don't do that well. They don't do credit cards well. It's almost like these companies should become one and just like rule the universe. It'd be great. Make Vlad CPO or something. I don't know. Get rid of that tech guy, the CTO. But anyway, no, they're bringing these people in. They're saying, okay, if you want this kind of match, you are with us for 5 years. Over 5 years, they will be, of course, continuing to increase those assets under management, which is significant for Robinhood. Over those 5 years, they're getting used to that platform, that UI, which is the best. It is the best,
right?
And for a reason. And so, do you think after 5 years, even if they don't have like the match and everything, their money is already there? Most people prefer to do nothing, but if they're using this phenomenal platform, that they're going to be like, you know what, I'm going to move my money over to Fidelity. Like a few, but I don't think most will. Plus, they're trying out Robinhood Gold, which is a really good product. I've not used it myself, but you like Gold?
It's great. And I don't know if you know this, Roy, but I think I'm grandfathered into a $5 per month. I just checked their website. It's $7 a month now. So they raised prices.
Okay. I hadn't heard that. Good. That's
and
good as a shareholder.
Free money, $7 a month. That's what, 75, 7 times, so about $84 a year of just 100% gross margin, right? Obviously, they have to use that money for other things, but like, it's free money that has nothing to do with trading.
And they do a phenomenal job with the flywheel effect on their end too, just like SoFi does on cross-selling their products. So if I'm on their platform, they're mentioning that match, the rolling over of IRA or 401k. They're mentioning their credit cards occasionally. You'll see those pop up. And of course, the credit cards, like the rewards can actually go right there and give you stock. It's just like, okay, this is done very, very well. I like the way that the company is headed. Don't necessarily want to be in it long term. For me, it's a trade, but I think it'll do well long term. I don't think it'll be a bad investment at all. But this year, man, I could be early in the timing. We'll see. But again, like if we get that quarter where they're killing it, but they're citing acquisition costs, this and the legal fees and that brings them down
to 7 or 8. It's a go all in type of.
I'm like tripling down, honestly.
Because the company doesn't deserve to be worth that. I mean, they even canceled $500 million of stock-based comp for the CEO and the chief creative officer, which was a big deal to me because he was like, look, I know the stock's been in the gutter. I probably don't deserve $500 million of SBC. So we're just going to get rid of it. And that's why they weren't profitable in Q1. And then, they started becoming profitable. And then again, last quarter, it was a $19 million fee, or it was a $100 million fee, and they would have been profitable by $19 million. So that's the other thing for Q4. It's like, I want to say they're not going to be profitable. But in my heart of hearts, I'm like, wait a second. The company is kind of like Palantir, where they transition to, we are going to be GAAP profitable. And outside of anything crazy, that is where the company is headed. So unless there is some massive regulatory fee that F's them up, they should squeeze out a profit. And the street is expecting them to not be profitable. So it would be a surprise.
Shock.
It would be a shock. So
around the world, maybe. One thing to be careful with Robinhood too is looking at the all-time highs. The float size is very different than when it first came out. So if you're not in a Robinhood, just don't have that expectation that it's going to pop to 70 this year.
Yeah.
If it does, something has gone really, really right for Robinhood, or the market,
or in a bubble.
There's a bubble. Like at that point, I'm like, okay, I'm going cash. Like I don't know.
Yeah, I think I think like 20 to me by 2025, end of 2025, January 2025, even June 2026. I think 20 is very reasonable. I think that makes a lot of sense. But some people think so. So I was talking to someone last night that says after 21, the volume to get to 33, because they were doing the male astrology technical stuff, was like it's just open. And I'm like, okay, that'd be awesome. But like I'm not expecting that, dude. If we get 15 and we hold that for 2025, 2024, I would be very happy, right? So yeah, for me, I think $20 is reasonable, but expecting 50, $60, that was at a whole different era when that happened.
I've positioned my strikes on the leaps very conservatively. I do see a scenario where we can get at a $30 hit this year.
Yeah.
It's realistic. It's possible, not guaranteed. So just do your due diligence. But there is a floor on this company that makes it very safe to hold, I think.
All right, Roy, this was awesome, but I got 6 minutes left with you. Tell me what you're expecting for Palantir. We got earnings on Monday. You are a very big shareholder of Palantir. That's how you and I got to know each other. What do you think they're going to do in the quarter? And are you optimistic or kind of scared about what they're going to say?
Yeah, at 70% of my holdings. So, I've diversified in fintech, but it wasn't over 90%, a year ago. So I've not sold any. I've just added.
And you really started loading in that 7, 8, 9 range. That was your main.
I think my first buy was 26.
Okay, so you've been DCAing. Gotcha.
But I've DCA'd. My largest purchase was through cash secured puts, which I have some cash secured puts loaded, I think for 15.5 coming in. I've not added in Palantir for over a year just because I had such a large position on it with a good cost basis. I got my share count happy where it was. I was listening to Vitaly and Carlos with having that goal in mind, even though they weren't the biggest fans of Palantir. They mentioned the long-term horizon, have that share count, figure out what you think it might be worth in the future, how many you need for that, and go from there. And I'm like, yeah, my Palantir is my number one highest conviction of any stock in the market long term. Short term, it can do anything, but for quarter four, I think what's going to be most interesting is the guidance for the year, to hear whether or not we get that AIP monetization, or how that'll play, what their customer count is. So if we saw a little bit of acceleration in quarter three, if we continue to see that, I think that the market will actually get very excited, especially if they guide or say something along that. I'd like to see the net dollar retention improve, but that may not meaningfully until we actually see AIP being monetized. But I don't know. The boot camps just have me so excited. It seems like it's the silver bullet that has solved their issues between AIP and the implementation of those with boot camps, that their greatest weakness has gone away, so to speak. The long sell cycle and trying to get a hearing and not being able to sell these things. Now they're like, okay, 1 to 5 day boot camps. They have companies lining up at the door. That number, when it exceeded the number of customers that Palantir currently has, I'm like, it's working, man. This is awesome. So we'll have to see. But I'm hoping that they guide for mid-20s of revenue growth throughout the year. Right. I don't think we'll see that for quarter four. But man, if we can, where are you thinking that we might end up as far as the revenue?
22%. I think 22 is reasonable
for the year or quarter four.
For the year. Quarter four, I think it's still, quarter four, they're guiding for like 18%, but they tend to beat on quarter four. So they guided 598 to 602. I mean, if it's a good quarter, I think they'll come in with 615, which would be probably 20% growth, but I'm expecting 605.
I'm thinking 19. Yeah. It's like just under it, but that'll give them the confidence to guide, throughout the year, conservatively. I do think that there will. So if somebody's already bearish on Palantir, they will absolutely cherry pick the data. And so government might actually be a little bit weak. I mean, people have been referencing that. It's still strong, but the main thing with the TAM, with the where Palantir is going, it's all about commercial and AIP employment on that, and of course international growth. I think those will do quite well. And I share your sentiments exactly with the Kohl's partnership. That's exciting, not just because it's an international commercial contract, but because of the network effects of what that can do. We're already seeing it with healthcare. Where they're just growing immensely in that sector, especially in the U.S. And I think that Kohl's has a potential to do the same in that space as well. So awesome company. I have zero. Whenever I come to a Palantir earnings now, maybe a year ago, I was like, oh, I'm nervous. Now I'm just like, I'm excited. Dude, the stock can go down. Whatever. Yeah. It's the stock. The company is killing it. And even if Alex Carp bangs on the table and sends it to $13, I'm going to buy that dip.
I will gladly take his bang on the table and buy it. Yes, yeah, I agree. Please. I mean, That's the right thing to say, dude. The stock is whatever. At the end of the day, we're in this for a very long term. I mean, I know we talk about trades and all this stuff and it's fun, but Palantir is the one company we're in it for like, a good 5-10 years. And
I'm not selling.
Yeah, the company's got, it's one of those generational companies where, and I talk about valuation a lot and all this stuff, but that's just short-term noise. At the end of the day, do you think CARP can take you to the promised land? And do you think this company is doing something different? And there's so many thousands of public companies. There's probably like 20 of them that are actually worth investing in. Palantir is one of those companies.
Oh yeah, yeah. That's one where no matter what happens, basically, I'm holding on to it. Now, if we spike to like $100 for some crazy reason, it shouldn't be. I'd be like, all right, yeah, I'm taking some off the table. But no, I plan to hold this at least through the decade, and I'll probably have some the rest of my life. Honestly, I not only think that the stock is a great deal. I love the company. I know they say not to fall in love with your investments. It's too late. Sorry, Alex Karp's hair, everything. It just you got me. The white beater, it just yeah.
Oh man, the amount of comments I've got saying you're too emotional about Palantir. I'm like, you're not wrong at this point. I don't know. Yeah, you got it.
Guilty.
Yeah.
I mean,
I'm guilty here. But it's part of the relationships you build along the way, and the fact that we can make friends and become, buddies over the internet just because of a stock. It deserves to get a little bit of your emotions.
Oh yeah, yeah.
All right, Roy, this was awesome. 316 people here. Please, please, please follow Roy on Twitter. I'm going to ask one more question to Roy, and he'll answer that while you guys are following him on Twitter. He is growing his brand tremendously. He is worth a follow if you care about finance updates, Palantir updates, SoFi, Robinhood, PayPal, and a lot of other stocks he's eventually going to be talking about as he builds his brand. I mean, this is one of those people that you need to have him in your list of your notifications to see what is he saying, what are his thoughts, because he's not spewing bullshit. He's actually doing it. I mean, for him to talk 8 minutes on a stablecoin, and I don't think you knew what a stablecoin was last year. So that means you actually have to do a lot of research, compartmentalize your thoughts, apply it to PayPal, and then effectively communicate it. That's a hard thing to do. So please, please, please make sure to follow Roy. Roy, while they're doing that, let me ask you this question. What is the future for you on your personal brand as a media entity around stocks?
Yeah, right now I'm just going to stick with what I'm doing on the X platform. I'm working on a PhD, hoping to finish that up in August. We might have a move that moves that a little bit back. And so that's what I'm doing with X is like that. That's enough. I might dabble into Seeking Alpha a bit.
I think you would crush. I think you would crush on that. Yeah.
I love long form. So it's like, that's my jam. I'll try it out. Yeah, Steven, he writes on there and he seems to love it. So maybe I'll follow him on that.
There's good money too. There's good money.
Yeah.
When you write an article every week, which is tough, but when you write an article every week, your name starts trending. And if it's good content, which I know it'll be, there is real good money there. So I think it's great.
YouTube I'll think about, but I don't know that that's the right platform for me. So, but I'm happy to come on anytime like this. So thank you for having me on.
All right. Thank you, everybody. Make sure you follow Roy. We'll hear from him after probably PayPal, Robinhood, SoFi earnings. After everything compiles in a month or two, we'll get him back on and we'll keep talking and keep going from there. Thank you, Roy. I appreciate it. See you, everybody. Have a great, great Saturday. Good night.